Preparing for a financial analyst at Traveler's interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work as a financial analyst at Travelers? I want to join Travelers because it combines rigorous financial analysis with a business that directly helps people and companies manage risk. The role appeals to me because analysts influence planning, performance measurement, and resource allocation, not just reporting historical results. I would bring strong Excel, accounting, and communication skills, while learning how underwriting, claims, investments, and capital interact. Travelers' reputation for disciplined execution and long-term thinking makes it an environment where I can develop and contribute. While answering, connect Travelers' insurance business, analytical decision-making, risk discipline, and your relevant skills. Demonstrate genuine interest in the company rather than giving a generic answer about finance or professional development. Question 2. What do you know about Travelers and how it makes money? Travelers is a major property and casualty insurer serving personal, business, and specialty customers. It primarily earns premiums by underwriting risks, then pays claims and operating expenses from that revenue. Profitability depends on pricing adequacy, exposure selection, claims severity, catastrophe experience, and investment income earned on policyholder funds. I would also mention that strong insurance results require balancing growth with underwriting discipline, because premium growth is not attractive if the associated risks are underpriced. Make sure to cover Travelers' property and casualty insurance model, premiums, underwriting results, investment income, claims costs, distribution channels, and the importance of pricing and reserving discipline. Question 3. Walk me through the 3 financial statements and how they connect. The income statement shows revenue, expenses, and net income over a period. Net income flows into retained earnings on the balance sheet, while the balance sheet presents assets, liabilities, and equity at a point in time. The cash flow statement reconciles net income to ending cash through operating, investing, and financing activities. For an insurer, changes in unpaid claims reserves affect liabilities and expenses, while investment purchases affect cash and the investment portfolio without immediately changing operating income. In your answer, explain the income statement, balance sheet, and cash flow statement, then connect net income, retained earnings, working capital, depreciation, reserves, and ending cash through a coherent example. Question 4. How would you analyze Travelers' quarterly financial performance? I would begin with actual results versus budget, prior year, and the prior quarter, separating volume, rate, mix, and timing effects. For Travelers, I would examine written and earned premiums, the combined ratio, loss and loss adjustment expense, catastrophe losses, expense trends, reserve development, and investment income. I would then investigate material variances with business partners and distinguish recurring operating changes from unusual events. Finally, I would summarize the drivers, risks, and implications for the forecast. Be sure to mention comparison against budget, prior periods, and peers, premium growth, underwriting margin, loss trends, catastrophe impacts, investment income, reserve development, and explaining material variances clearly. Question 5. What is the combined ratio, and why is it important for an insurer? The combined ratio equals the loss ratio plus the expense ratio. A result below 100% indicates underwriting profit, while a result above 100% indicates underwriting loss before considering investment income. I would analyze both the reported ratio and the underlying ratio excluding catastrophe losses or reserve adjustments, because headline results can be volatile. For Travelers, the metric helps evaluate whether premiums adequately compensate for expected claims and operating costs, making it central to pricing and profitability analysis. Focus on the combined ratio formula, loss and expense components, interpretation above or below 100%, catastrophe effects, and why analysts should separate underlying performance from volatile one-time events. Question 6. What is the difference between written premium and earned premium? Written premium is the premium associated with policies issued or renewed during a period, while earned premium is the portion recognized as coverage is provided. For example, a 12-month policy written in December contributes most of its written premium immediately but earns revenue gradually across the following year. Unearned premium remains a liability until coverage occurs. I would use written premium to assess sales and growth momentum, and earned premium to match revenue with current period exposure. Make sure to explain policy timing, recognition over the coverage period, the role of unearned premium reserves, and why analysts use both metrics when assessing growth and current period profitability. Question 7. How would you forecast an insurance business's revenue and expenses? I would forecast premium using policy counts, insured exposures, rate changes, retention, new business, and renewal assumptions, then convert written premium to earned premium based on policy timing. Expenses would be modeled using loss ratio and expense ratio assumptions, supported by claims trends, catastrophe expectations, payroll, commissions, and other operating drivers. I would create base, upside, and downside cases, compare outputs with historical patterns, and review assumptions with underwriting and claims stakeholders before finalizing the forecast. In your answer, discuss exposure and rate assumptions, retention, earned premium timing, loss ratios, expense ratios, catastrophe assumptions, scenario analysis, and validation against historical and operational data. Question 8. What is loss reserving, and why does it matter to travelers? Loss reserving is estimating the ultimate cost of claims, including amounts already reported and claims incurred but not yet reported. Case reserves capture adjuster estimates, while IBNR reflects expected future reporting and development. Adequate reserves are essential because under-reserving overstates current profit and creates future adverse development. Over-reserving suppresses current results. I would monitor reserve triangles, actuarial indications, claim severity, settlement patterns, and prior year development, while recognizing that estimates evolve as new information arrives. Cover incurred claims, case reserves, incurred but not reported claims, actuarial estimates, reserve adequacy, development, earnings volatility, and the connection between reserving judgments and financial statement credibility. Question 9. How do catastrophes affect an insurer's financial results? Catastrophes can sharply increase claims, adjustment expenses, and reserve needs in a quarter, causing the loss ratio and combined ratio to deteriorate. I would separately identify catastrophe losses, consider reinsurance recoveries and associated costs, and assess whether the event changes future pricing or exposure assumptions. I would also distinguish reported performance from underlying results, because a severe storm may be unusual while still revealing concentration or risk management issues. Clear disclosure helps management interpret operating momentum. Be sure to discuss claims severity, catastrophe losses, reinsurance recoveries, reserve uncertainty, earnings volatility, geographical concentration, and presenting underlying results separately from event-driven performance. Question 10. How would rising interest rates affect travelers? Rising rates generally increase future investment income as maturing securities are reinvested at higher yields, which can support earnings over time. However, existing fixed income securities decline in market value, creating potential unrealized losses depending on classification and duration. Higher discount rates may also affect the valuation of liabilities and other financial assumptions. I would analyze the portfolio's duration, cash flow needs, reinvestment pace, and accounting treatment rather than assuming higher rates are immediately positive. Discuss reinvestment income, bond portfolio valuations, duration, unrealized gains or losses, discount rates, policyholder liabilities, and the distinction between short-term accounting effects and long-term earnings benefits. Question 11. Tell me about a time you found an error in financial analysis. During a budgeting project, I noticed a department's forecast margin improved despite lower revenue and unchanged costs. I traced the variance to a formula that referenced the prior month's expense column rather than the current forecast period. I rebuilt the calculation, reconciled the totals to the source file, and explained the issue to my manager with a clear impact estimate. I then added cross-foot checks and protected formula cells. The experience reinforced the value of reasonableness testing, not just formula review. Focus on the situation, analytical checks performed, root cause, communication style, corrective action, and preventive control. Show ownership without blaming others and quantify the impact when possible. Question 12. Describe a time you had to explain complex financial information to a non-finance audience. I once presented a forecast variance to an operations team unfamiliar with accounting terminology. Instead of leading with accounting classifications, I showed that labor hours were above plan, linked those hours to activity levels, and translated the impact into dollars and service capacity. I used a simple bridge chart and paused for questions. The team identified an operational scheduling issue, which improved the forecast. That experience taught me that effective finance communication starts with the decision the audience needs to make. In your answer, emphasize audience awareness, simplifying technical concepts, focusing on business implications, using clear visuals, checking understanding, and adapting the message without sacrificing accuracy. Question 13. What Excel tools would you use in a financial analyst role? I would use SumIfs, XLOOKUP, index match, pivot tables, and logical formulas to organize and reconcile financial data. For forecasting, I would build assumption sections, scenario toggles, sensitivity tables, and concise charts that highlight key drivers. I also use checks for balance, completeness, duplicate records, and unexpected variances. My priority is not using complicated formulas for their own sake. It is creating a transparent, auditable model that another analyst can understand and update confidently. Mention pivot tables, XLOOKUP or index match, SumIfs, if logic, charts, data validation, scenario analysis, error checks, and disciplined model structure. Tie tools to accuracy and decision support. Question 14. How would you ensure accuracy when working with a large financial dataset? I would first confirm the source, reporting period, definitions, and completeness of the dataset. Then I would standardize formats, identify duplicates or missing values, reconcile totals to an independent report, and use exception checks to isolate unusual records. I would document transformations and preserve the raw data so the process remains reproducible. Before sharing results, I would perform a reasonableness review against prior periods and ask a colleague to independently test key outputs. Cover source validation, data cleaning, control totals, reconciliations, duplicate checks, independent review, documentation, version control, and investigating exceptions instead of manually forcing numbers to agree. Question 15. How do you prioritize competing deadlines from different stakeholders? I prioritize by considering regulatory or executive importance, decision deadlines, downstream dependencies, and the effort required. I clarify the desired output and deadline with each stakeholder, then create a visible work plan with checkpoints. If two requests conflict, I communicate the trade-off early and propose a realistic sequence or interim deliverable. I protect time for review because a rushed error can create more work than a short delay. This approach keeps stakeholders informed while maintaining analytical quality. Be sure to explain how you assess business impact, urgency, dependencies, effort, and quality risk. Mention proactive communication, transparent trade-offs, and escalating conflicts early rather than missing deadlines silently. Question 16. Tell me about a time you worked with incomplete or ambiguous information. While preparing a forecast, I lacked final volume data from one operating team. I used the latest validated run rate, compared it with seasonal history, and created a range rather than presenting a false point estimate. I clearly labeled the assumption, showed the sensitivity to the missing input, and contacted the team for a timing update. Once actual data arrived, I refreshed the model and explained the variance. That process balanced speed, transparency, and decision usefulness. Discuss how you identified assumptions, gathered reliable inputs, tested alternatives, documented uncertainty, and made a practical recommendation. Demonstrate judgment rather than waiting indefinitely for perfect information. Question 17. What financial metrics would you monitor for travelers? I would monitor written and earned premium growth, retention, renewal rate changes, loss ratio, expense ratio, combined ratio, catastrophe losses, and prior year reserve development. I would also track investment income, operating expenses, capital measures, and performance by business segment. The right dashboard should connect metrics to decisions. Premium growth without adequate pricing is concerning, while a higher expense ratio may be acceptable if it supports profitable growth. I would combine financial outcomes with operational drivers to explain performance. Include premium growth, retention, rate adequacy, loss and expense ratios, combined ratio, reserve development, investment income, operating expenses, capital strength, and metrics tailored to management's decision. Question 18. How would you evaluate whether an insurance segment is growing profitably? I would not judge profitable growth from premium increases alone. I would examine whether rate changes exceed loss cost trends, whether new business has attractive risk characteristics, and whether retention remains healthy. Then I would assess loss ratio, expense ratio, combined ratio, reserve development, catastrophe exposure, and capital required to support growth. A segment can grow rapidly while destroying value if pricing is inadequate. I would therefore compare incremental premium economics and risk-adjusted returns with strategic targets. Focus on separating growth from value creation through rate adequacy, exposure quality, retention, loss trends, combined ratio, expense leverage, capital usage, and returns relative to risk. Question 19. What would you do if you disagreed with a forecast assumption from a business partner? I would first understand the business partner's rationale and the data supporting the assumption. If I still disagreed, I would present historical evidence, relevant external or operational indicators, and a sensitivity analysis showing the financial impact. Rather than arguing for a single answer, I would offer base, upside, and downside cases and agree on indicators that would trigger a revision. I would document the final judgment and escalate only if the assumption created material reporting, planning, or risk concerns. Mention respectful challenge, evidence-based analysis, understanding the partner's rationale, sensitivity testing, documented assumptions, alternative scenarios, and escalation only when the decision or risk warrants it. Question 20. Why should travelers hire you for this financial analyst position? Travelers should hire me because I combine financial fundamentals with disciplined, practical analysis. I am comfortable building models, reconciling data, investigating variances, and communicating conclusions to non-finance partners. In prior work, I found a forecasting error, quantified its impact, corrected the model, and added controls to prevent recurrence. I also ask how numbers affect customers, operations, and risk, not just whether they balance. I would bring reliability, curiosity, and a collaborative mindset to Travelers' finance team. Be sure to combine technical capability, attention to detail, communication, ownership, business curiosity, and alignment with Travelers' risk-focused culture. Support claims with one concise example and explain how you will add value. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.